Imagine a website. That's all it was. A website with an idea, no revenue, no profit, no actual business model. But investors valued it at $1 billion. Then when it went public, that value tripled. Then it crashed to zero. This wasn't just one company, this happened to thousands. In the year 2000, $5 trillion in wealth vanished in just 3 years. This is the story of the first truly global economic bubble, powered by technology and pure hype. Everyone knows about historical bubbles, the tulip mania, the South Sea Company, the housing crisis. But the dot-com bubble was different. For the first time, regular people, not just merchants or speculators, had direct access to investments. And for the first time, the internet let rumors spread instantly across the entire world. It was tulip mania with technology. It was the South Sea bubble with the web. And it was a preview of every single bubble that would follow, because the same pattern still works today. Let's go back to 1995. The World Wide Web is becoming mainstream. AOL is giving millions of people internet access for the first time. And investors realize this is revolutionary. The internet is going to change everything. And they were right. But here's where they went wrong. They assumed that if a company had .com in its name, it would automatically become valuable. So literally anyone could start a company, register a domain, and raise millions in venture capital. Had an idea for a website that might make money in 5 years? Here's $1 million. Had a weird idea that made no sense? Still $1 million. Take petstore.com. The idea was to deliver pet food online instead of people going to a store. Sounds reasonable, right? It wasn't. Shipping costs made it economically impossible. But in 1999, petstore.com had a market cap of $300 million. Another one, Pets.com, aired a Super Bowl commercial that cost $2 million. They burned through $300 million in venture capital and went bankrupt after just 2 years. They lost money on every single sale they made. Any business textbook would tell you this was insane. But in 1999, it was completely normal. Now, here's the truly insane part. People knew it didn't make sense. Economists said it was a bubble. Financial experts warned everyone. But the FOMO, the fear of missing out, was so strong that nobody sold. If you sold your tech stocks in 1998 and they went up 300% in 1999, you'd feel like a total idiot. So even smart people kept buying. Grandmas were opening brokerage accounts to buy tech stocks. Teenagers were day trading during school hours. People were using their mortgage payments as investment capital. The mantra was, the old rules don't apply anymore. This is the new economy. We'd never heard this before. It was almost religious. It was an act of faith. Tech companies don't need profit, they just need users. Growth is all that matters. Ignore the losses. The first mover wins. It doesn't matter if the business model is broken. These phrases became the dogma of the dot-com era, and the stock market actually rewarded the companies that lost the most money. Amazon in 1999 was losing money on every single sale, but its stock was worth billions. And you know what? Investors didn't care. They believed that eventually, Amazon would become profitable. In their case, they were right, but it took 15 years. Then came March 2000. Someone finally asked a simple question. But where's the profit? And the answer was, there is none. Suddenly, the market realized that price-to-earnings ratios of 1,000 to 1 didn't make any sense. A company losing $1 million a year, valued at $1 billion? That's insane. And so, the crash began. From March 2000 to October 2002, the Nasdaq index fell by 78%. $5 trillion in wealth vanished, literally vaporized. Companies that IPO'd in 1999 with billion-dollar valuations went bankrupt. Pets.com, bankrupt. eToys.com, bankrupt. March 1st.com, bankrupt. Thousands of companies simply ceased to exist. And the people who bought at the peak? Most of them never recovered. If you bought tech stocks in March of 2000, it took until 2008, 8 long years, just to break even. Now, here's what makes the dot-com bubble so important today. The exact same thing is happening right now. Fast forward to today, We see AI companies with no revenue and massive losses valued at billions of dollars. Some of these companies have never made a single dollar of profit, yet their market caps are in the tens of billions. If that sounds familiar, it should. It's exactly like Amazon in 1999 or Pets.com right before it went bankrupt. The narrative has changed, but the pattern is identical. AI will change everything. Don't worry about current losses. The potential is unlimited. Growth is all that matters. Everyone will be left behind if they don't invest now. We're not learning from history. We're repeating it. The dot-com bubble taught us a crucial lesson. An idea is not a business. Technology is not money. Users are not revenue. Growth that doesn't lead to profit is just spending. But most importantly, it taught us that even the smartest investors get caught in bubbles. Venture capitalists worth billions lost everything. Nobel Prize winners invested in companies that went bankrupt. Because greed is more powerful than intelligence. FOMO is more powerful than logic. The belief that this time is different is stronger than economic reality. The dot-com bubble killed thousands of companies and destroyed trillions of dollars. But you know what's important? Many of those companies shouldn't have died. Amazon, eBay, Google. They were all hit hard by the crash, but they survived because they eventually became profitable. The lesson isn't to avoid tech investments. The lesson is to make sure the business model actually works. Does the company lose money because it's growing? That might be okay. Or does it lose money because its fundamental business makes 0 sense? That's when you run away. There's a big difference. And learning to see that difference could save you millions. If you realize you're seeing this exact pattern happening today, hit that like button. Because we're not avoiding bubbles, we're just renaming them. The AI bubble, the crypto bubble, the metaverse bubble, and whatever comes next. Subscribe so you can understand the real signs of a bubble before they impact your life. And comment below. What bubble do you think is forming right now? Because I guarantee you it's already here. Thanks for watching.